Hello friends, we'll be discussing an illustration which is related to the forfeiture. In this specific illustration, we'll be discussing about the securities premium not being paid and how the executive, or rather how the journal entries are supposed to be passed here. So when we speak about securities premium not being paid by any of the shareholder, we need to have a change in the share forfeiture journal entry. That means a simple change, that a securities premium account has to be cancelled. If premium is what we are talking about, it has a credit balance. So whenever we have to cancel it, it has to be mentioned on the debit side. That is the only addition that you have to do in the share forfeiture account. So whenever this kind of premium not being paid is a part of your question, make sure share premium account or securities premium account, any name, whatever you call it, has to be mentioned in your journal entry. To give you a brief idea about this, let's pass on certain journal entries for this specific illustration that will be drawing to, or rather that will be jotting down for your reference. So let's go ahead with this specific journal entries here. Now, this specific comprehensive problem will have specifically, or rather we are deriving this kind of problem only for you to understand how securities premium is supposed to be dealt with. Now, this question states about Messrs. XP Import Limited, who has issued 5 lakh equity share of rupees 10 each. Now, this is the issuance, or rather the face value of this price, or rather face value of this specific share. That means every share, the face value was rupees 10. It was issued at a different price, what will be mentioned down here. Now, the question states that it was payable, or rather, it was issued at a price of 15 per share, which were payable as follows. That means the bifurcation between application, allotment, first and final call, whatever it is, will be mentioned down in the question. Now, the bifurcation of rupees 15, or rather rupees 10, has been mentioned here. They have been taking rupees 2 on application, rupees 6 on allotment, which includes security premium of rupees 5 as well, rupees 4 on first call, and rupees 3 on final call here. Now, the subscription that they received was for 4 lakh equity share. They had issued 5 lakh equity share. However, the subscription received was only for 4 lakh, and accordingly the calculation was made. Now, let's go into the part of forfeiture here. Now, when we talk about forfeiture, we have two people here, Mr. B and Mr. X. Mr. B held around 4,000 shares, who failed to pay the allotment and first call money here, post which his shares were forfeited. Now, on the other hand, we had Mr. X, who failed to pay the first and final call money. He had around 6,000 shares. So, after he failed to pay the final call money, his shares were also forfeited, and now we were supposed to take care only of the journal transactions here. Now, what we'll be doing is that we'll be journalizing the transactions and we'll be going in a chronological order. So, let's start with the journal entry first of all. Now, the first entry that we'll be passing is the receipt of application money. Here, when we're talking about receipt of application money, we have received only 4 lakh shares. That means the application was done only for 4 lakh. So we'll be receiving only that much of amount. So let's transfer, or rather let's make the calculation as per that here. Now, the application that we have received is only for 4 lakh shares. The application money that they have paid is only 2 rupees per share. So 4 lakh multiplied by 2 will be the value of the application amount that we have received here. Now, the second thing that we'll be doing here is transferring the application money to the share capital. Usually, we would do as per 5 lakh multiplied by 2, but however, the application itself is received here for 4 lakh subscriptions, then only that much amount is supposed to be moved to the share capital account. So, let's pass that entry now. Now that we know that this specific transaction, or rather this capital amount, or rather application amount has been moved to the capital, we can now hop on to the allotment entry. So let's pass on the allotment entry now. This will be allotment due. Now, when we are talking about allotment amount rupees 6 includes a premium of rupees 5 here, because the face value is rupees 10 and it has been issued at rupees 15. That means the premium is rupees 5. So this 5 is included in the allotment money of rupees 6. So if you can see, we have 6 rupees on allotment here, out of which 5 rupees is towards premium. So 1 rupees will be towards capital amount. Now, the shares that we have allotted is only 4 lakh, so everything will be multiplied by 4 lakh here. So for security premium, it will be 4 lakh multiplied by 5. For share capital, it will be 4 lakh multiplied by 1. And towards share allotment on the debit side, it will be 4 lakh multiplied by 6. So the total allotment amount is 24 lakh, out of which 20 lakh is the premium and 4 lakh is the share capital here. Now we'll go on to the receipt part. When we're talking about receipt here, there are certain call scenarios, because there is Mr. X, or rather there is Mr. B, who didn't pay up the allotment amount. So we'll have to consider that person's shares as well, which is amounting to 4,000 shares here. Now the entry that we have passed here is bank account debit calls in arrears account debit to share allotment account. We are expecting 24 lakh, but we are not supposed to receive 24 lakh, because one shareholder, Mr. B, who has around 4,000 shares, hadn't paid up the allotment amount, which refers to 6 rupees. So 4,000 multiplied by 6, that amount hasn't been paid up by this specific shareholder. So we'll mention that in call scenarios. So we're expecting 24 lakh, out of which 4,000 multiplied by 6, that is 24,000, we are not supposed to receive here. Whatever balance is left is what we have already received, and that is mentioned in the bank account. So in the bank account, we have received 23 lakh 76,000. Now it's time for us to mention the first call due entry. Now, when it comes to share first call, we are expecting 4 rupees on every share that we have issued. That means 4 lakh multiplied by 4, which will give you a value of 16 lakh rupees. So that is the amount that we are expecting here. But when it comes to receipt entry, we'll figure out what exactly we have received here. Now, when it comes to the receipt of share first call, we have two people now. One, Mr. B, who has 4,000 shares. He didn't pay up the first call money as well. And Mr. X, who didn't pay up the first and the final call money. Now, we'll be taking both these call scenarios, that is Mr. B and Mr. X. 6,000 shares for Mr. X and 4,000 shares for Mr. B. Both will be taken into consideration. That is a total of 10,000 shares, for which we haven't received 4 rupees on every such share. That means 40,000 is calls in arrears in total. So out of the amount that we have here for 16 lakh rupees, out of that 16 lakh, we are not supposed to receive 40,000, because that hasn't been paid. So whatever balance is left will be a part of our bank account. So in our bank account, we have received somewhere around 15,60,000 rupees. Now, the point of discussion comes down to, after the first call, the company decided to forfeiture Mr. B's share. That means 4,000 shares are supposed to be cancelled off, written off. So let's pass the forfeiture entry. But before passing the forfeiture entry, we need to figure out that this is the person who hasn't paid the premium. So we have to pass the cancellation entry for premium as well. Now, the entry that we have passed here is share capital account debit, securities premium or share premium account debit, to calls in arrears, and to share forfeiture account. Now, when we are dealing with share capital account, that will be number of shares being forfeited into the called up amount. As we are going to go ahead with the share forfeiture after the first call, because until now we have called up only for the first call and amount until first call basically. So that will be taken into consideration here. So now when we're talking about share capital account, it will be 4,000 shares because this is related to B. And that will be multiplied with the amount of share being called up. So if we have called up application, we have called up allotment. Allotment, you have to take only the capital amount, not the premium, because for premium we already have something related to share premium account. So we have a total of called up amount of 2 rupees on application, 1 rupees on allotment, and 4 rupees on first call. So total will be 7 rupees that we have called up in terms of capital. Security premium will refer to 5 rupees of premium on 4,000 shares. Now, we'll be mentioning on the share forfeiture account whatever amount we have received. From this person, we didn't receive the allotment, we didn't receive the final call, we didn't receive the first call. So we have received only application money. So only that much will be credited into the forfeiture account. So now the balancing figure will be the calls in arrears. Whatever calls in arrears are there, that will be only related to Mr. B. So Mr. B has failed on paying up the securities amount. That means the allotment and the total of first call. That is, the total of allotment was rupees 6 and the total of first call was rupees 4. So 10 rupees he has failed to pay. So that will be 4,000 into 10 equivalent to 40,000 here. So now that post this entry we have successfully completed the share forfeiture account, we'll go on to the due entry of second call. Now, when we are expecting the due entry of second call, we are not expecting for the complete 4 lakh shares, because out of those 4 lakh shares, we have cancelled out 4,000. So whatever balance is there, we are expecting receipt or rather due for second call only for those many shares. So 4 lakh minus 4,000, whatever balance is there, somewhere around 3 lakh 99,600, or rather 3,96,000 is what we are expecting. So 3,96,000 shares only will be taken in consideration for second call, receipt and due. Let's figure out the entry for second call. Now we'll be passing the entry for due of second call. So ideally we are supposed to receive 11,88,000 is what we are expecting, because we have 3,96,000 shares only to deal with, and that will be multiplied by rupees 3 because that is the value of share second call. Now we'll start with the receipt entry. Now in this receipt entry we have again one person, Mr. X, who has failed to pay the final call money as well. So that will be calls in arrears here. Now this person, Mr. X, hasn't paid 6,000 shares value worth rupees multiplied by 3. That means 6,000 into 3 will give you a value of 18,000. He hasn't paid that much of amount. So let's take that into consideration for call scenarios. So So ideally, when we're talking about receipt of share final call, we have received only 11,70,000. Now, after this, the company decided to forfeit his share as well. That means 6,000 share also to be taken off the grid. Now, we'll pass the entry for share forfeiture account of the second call, or rather of Mr. X here. Now, as we're talking about share forfeiture of Mr. X didn't pay only the first and the final call, but he has paid the allotment money. That means he has completely given us the amount which we have called up for, and that receives or that refers to allotment and application. He only didn't pay up the calls in areas referred to the specifications of first and final call. So we'll take that into consideration, as we don't have to cancel the premium here. So the entry for forfeiture here will be share capital account debit to call scenarios to share forfeiture account, as we do not have to cancel the securities premium. Hence, security premium or share premium won't be debited here. Now, when we're talking about share capital account, we'll mention the amount that we have called up. We have called up the whole 10 rupees, not taking the premium into consideration. Hence, capital will refer only to the capital amount. We have called up all 10 rupees here. So, share capital will refer to 6,000 shares multiplied by 10 rupees here. Now, calls in arrears refers to this specific person not paying the amount referred to his first and final call. First call being 4 rupees and final call being 3 rupees. Total of 7 rupees he hasn't paid. So, that refers to only allotment, that is 1 rupees he has received, or rather we have received 1 rupees related to allotment and 2 rupees related to application. So we have received only that much of amount. So calls in errors will be 6,000 multiplied by 7, and share forfeiture will be the amount that we have received here, that is 6,000 multiplied by 3. So with this, we mark the closure of the share forfeiture account for this specific illustration. We have figured out how the entry is supposed to be passed, how it goes on, and how exactly we're supposed to pass the journal entries when it comes to securities premium being not paid in any of the illustration of share forfeiture. So I hope the share forfeiture entry related to this specific illustration, especially when the share premium account is not paid, is clarified with you. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.